And with expenses, it's a little bit different. And this is another reason why it's very important when negotiating to work with a professional. Now, again, there are some people there have been attorneys I've worked with that saw this form and they were like, hey, I think I'm going to take it from here. If I need help, I'll come back. Cool beans. I'm not going to judge your tax competency, but it's more than just a form, right? There are certain things about tax law that you need to understand in order to make sure that you aren't paying more than you're legally obligated during this negotiation process. Okay?
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 39. This is part 2 of Form 433F. So just in case you didn't tune in last episode, I'm not going to hold that against you, but you should probably go back and check it out. We talked about Form 433F, the collection information statement. And the reason I wanted to talk about that is to give you a little bit more insight into the tax representation process, or I'll call it the tax negotiation process, because you may be listening to this and you're going to do this DIY, right? So with Form 433F, the IRS uses this to collect your financial information, not just income, but also your debt, expenses, and assets, because you've come to them to say you can't pay your tax debt in full. And this form is their way of saying, prove it. Okay? And honestly, if you have been going through this process of trying to negotiate your tax debt and you've worked with a tax professional and you don't know what Form 433F is, or you don't know that the IRS needs this additional information, they've actually done you a disservice. And if you're a tax pro listening to this and you don't actually fill out the 433F for your client to see what they qualify for, you are doing them a disservice. So if you remember a few episodes ago, and I say few jokingly because it was a while ago, I did an episode where I talked about the 3 phases of tax relief, right? I had the investigation, the compliance, and then the part we all love, the negotiation. In order to negotiate and have a leg to stand on, we need Form 433F because it drops out what the taxpayer can afford to pay. And then we also have that substantiation. So we already know what the IRS is likely to accept that will satisfy them and not bankrupt the taxpayer. Okay? So last episode, we talked about the purpose of the form. We talked about the type of information that you need to fill out the form. And then we talked about, do I have to give this information to the IRS? So if you don't know the answer to any of those questions, go back and check out episode 38. Today, we're going to talk about the detailed information that's requested, because I want you to have this right and understand it, because back taxes, it shouldn't ruin your life. It doesn't have to. Then we're going to talk about, what do I have to substantiate? Because last episode, I told you all there are some things that you're going to have to provide more proof for. There are other things that you are not. To be sure, I recommended that you book a tax relief consultation, even if it's not with me, just to make sure you aren't cheating yourself and paying more than you actually have to pay. And I'm going to give that to you for free, right? Because I'm here to fill the tax literacy gap one taxpayer at a time. Last but not least, we're going to talk about, how do I know if it's right? And when we say it, I'm talking about Form 433F. Last episode, I told you that this form is required if you are requesting an installment agreement and you cannot make the payment in full within 72 months or before the collection statute expiration date, which is the last date that the IRS has to collect on that debt. That goes for if you owe $25,000 and you can't pay it within 72 months, but it also is going to go if you can pay something off within 72 months, but the amount is over 50,000. Now, tax law is ever evolving, ever changing. We're looking at potentially that going away if it's under 100,000. But until that's official, right now, if you are up over 50, I would say prepare for the 433F if you can't pay the tax in full. Okay? So let's get into this detailed information requested. They want to know your mom's maiden name. No, I'm just kidding. But they do want to know a lot of information. They want to know your bank account information. Because if you're saying, hey, right now this is my cash flow, this is the only money I'm making, they want you to prove that. So you have to show your bank account statements as well as give your bank account numbers. So if you say you're getting paid $1,500 every other week, that is what should be going into that account every other week. They want to see all of the accounts that your name is attached to. All right. They want to see your different lines of credit. This includes credit cards. They want to see those numbers. They want to see what are you actually purchasing with those credit cards and lines of credit if you're still actively using them, because that's not going to be an allowable expense per se unless you're buying things to live, such as groceries, paying utility bills. However, if you're going out living it up and having fun with your credit cards instead of paying the IRS, they are going to have a problem with that. They want to see how much wiggle room you have on your credit card to see if you could use that to make payments to them. Last episode, I talked about the different assets, okay? And they're not kidding about these assets. They want to know the account numbers and balances of your retirement accounts. If you own vehicles, this includes, it could be a bike, which I'm saying motorcycle, it could be a boat. They want the VIN. They want the vehicle identification number because they're going to look that bad boy up. They want to know how much you owe on that vehicle. How much equity do you have in it? How much would that vehicle sell for right now? Because if you're living above your means, what they determine to be your means, they may request, and request is nice, they may have you sell those vehicles to be able to pay them off. Now, if you're thinking this is ridiculous, complete government overreach, let me give you an example. So I worked with a taxpayer, and this gentleman had 2 motorcycles. They were nice too. And here's another pro tip. Just let me give you this. If you were going to go research the tax professional that you're working with on social media, that's cool. But if you plan on lying to them about assets, it's probably not a good idea to send them a friend request. Because here's the thing. If you have all of these bikes, all these vacations, if it's easy for me to see that on your social media, guess who else can see it? The IRS. Now, I'm not saying lie, but I am saying, hey, you may want to be taking into consideration some of the things you're posting, okay? But back to my story. So this gentleman had 2 motorcycles. He had a truck, he had a car, and he had a boat. And he was single. And his children were adult by age. So they're in their early 20s. He really was still taking care of them. I said, that, sir, I may be able to wiggle with your children. But all of these vehicles, you are probably going to have to sell something. Now, he told me that was complete government overreach. He wasn't going for it. And I said, if I turn this in, they are going to have a problem with it. He didn't believe me. I said, well, this is what we're going to do. Because when I work with clients, I always have a plan A and a plan B. If plan A doesn't work, I've already figured out plan B. This is what we're going to go with. If you want me to fill out paperwork that I'm telling you is not going to work, then that's on you and an additional fee. He said, well, I know this is complete government overreach. And I tried to show him IRM, which is the revenue manual, and he still didn't believe me. So guess what happened when I got on and tried to negotiate with those vehicles? The person on the line was like, wait a minute. He has a boat, 2 motorcycles, and they laughed. I think they were trying to laugh at me, but actually we ended up laughing together because if you are going to hire an expert, you have to trust that they are the actual expert. So in this situation, this gentleman, because he was still making payments on the majority of these vehicles, he wanted that to be taken into consideration as expenses and lower the amount that he could afford to pay, right? The IRS said no, which I knew they would. I told him no, but that is something that if you are a taxpayer not working with a professional, you may not know to take into consideration. So you can Google Form 433F yourself and check it out. It does request the VIN for your vehicles. Next, we're looking at loan numbers and balances. Again, they want to see what kind of debt you have. When did you incur that debt? Because if you're out here racking up other debt and making your expenses go high instead of paying them, they're going to have an issue with that. Now, those are just a few of them. There are more. If you were doing this DIY, even if you're working with a professional, I highly recommend you do Google the 433F just so you have a better idea of why the tax professional is asking you for certain information. And you can raise your hand to be like, hey, I know I have to turn XYZ in. Why didn't you ask me for that? So when we're looking at what we have to substantiate, just like I gave you the example up above for the vehicles, you have to turn in the VIN number. All assets you have to substantiate. So not only are we looking at the asset itself, but also expenses that are going to be associated with the asset. For example, if you have vehicles and you say, hey, this is how much I'm paying in car insurance. Well, guess what? I need at minimum the last 3 months of your invoice from your insurance. Now, I know some people pay their premium 6 months, 12 months. We can divide that. That's fine. But that bill that you claim to have paid is going to also have to match the amount that came out of your bank account. Because remember, if we're saying you have a certain amount of income, they want that bank account number and statement to make sure that's the only income coming in. Same thing with expenses. You have to make sure that if you were telling them you paid this expense, it's going to match the invoice as well as what is actually coming out of your bank account. You need to substantiate all liabilities. If you were saying you have a certain amount of credit card debt, if you were saying, hey, I'm still paying on this vehicle, so it's not a complete asset yet, we need to be able to show the IRS, hey, this is what they owe, this is what they're actually paying. Even if it's a home that you own, right? And you're saying this is what my mortgage payment is, we need a copy of that. If you're renting, we need a copy of that lease to show the IRS, but that's not good enough. We need to show them that it's actually coming out of your account. Because if you have bills that you're not paying, well, the IRS is like, hey, what are you doing with that money that you said that you got, but you're not paying these other bills? You need to be paying us. Now, with expenses, it's a little bit different. And this is another reason why it's very important when negotiating to work with a professional. Now, again, there are some people there have been attorneys I've worked with that saw this form and they were like, hey, I think I'm going to take it from here. If I need help, I'll come back. Cool beans. I'm not going to judge your tax competency, but it's more than just a form, right? There are certain things about tax law that you need to understand in order to make sure that you aren't paying more than you're legally obligated during this negotiation process. Okay? When we're looking at expenses, there are certain things that we're going to look at the national and local standards. So, if you think of the national and local standards, it's very similar to the standard deduction with your tax return. So when you're filing your personal tax return, you can either itemize, and that is for people who typically give a lot in charitable contributions. They own a home, so they have that mortgage interest. They pay a lot in state and local tax, right? But if your state and local tax don't add up to the standard deduction, if it's not more than that, you automatically get the standard without having to request it. The same thing works, or it works the same way here with the national and local standards. If you have a family of 3 and you live in Orlando, Florida, there is already a national and local standard for some of your expenses. For example, if we are looking at the standard for a car payment, that is going to already be there. Now, if your car payment is above the standard, which if you bought a car recently, it very well may be, you are going to have to substantiate that. However, if we're looking at the local standards for what a mortgage is in Orlando, Florida, or for what rent is in Orlando, Florida, if your rent is beneath the amount of the local standard, now sometimes they want that substantiation. They may try to go back and forth with you, but if it's under that, you should still be getting the standard, right? So sometimes that gives taxpayers a little bit of wiggle room and grace because maybe we're really close to what the IRS is saying they can pay monthly, but those local standards or national standards will lower the amount that they can pay each month according to the IRS own rules on their own form. So that's something to keep in mind. But if you're overwhelmed by this tax debt, and like I said before, you probably owe other people as well, you're not going to be thinking about that. And that's where hiring a tax professional to help guide you through this, at least, or to take this on for you, is going to be huge. Now, I talked about assets, liabilities, expenses. A lot of people don't think about their cash flow as an asset. So I do want to mention that here. Any income that you have, you are going to have to substantiate that. And this includes income that is not taxable. So let's say that somebody's on Social Security, that's their only form of income. Well, if we're looking at the 1040, that wouldn't be taxable. However, if you owe back taxes from previous years where you did have to file, you are going to have to show the amount that you are actually getting in Social Security each month. Okay? If you work a W-2 job, and let's say we're doing the last 3 months, you are going to have to show every single check stub from the last 3 months and those bank statements to show that that money actually did go into the account. Even if you were divorced prior to the Tax Cut and Job Act and alimony wasn't taxable for you, you were going to have to show alimony payments. You were going to have to show child support payments. So that is something to keep in mind. If you have any expenses that are allowable that go above the national standard, you are going to have to substantiate that. That includes things such as delinquent state and local taxes, which is actually good for you because that means the IRS is going to lower the amount that they say you have to pay them if you were catching up on back taxes from a state or local revenue department. Okay? If we're looking, I talked about the mortgage and rent. If yours is above the average, you are going to have to substantiate that. Not only showing that your lease says that you have to pay more than that, but actually showing from your bank account that you are paying it. So the form actually isn't that long. It is a tax form though, and I know that gives some people the heebie-jeebies. I look at it often. Again, I'm not going to judge your tax competency. Even if you are a tax professional, you may be thinking, how do I know if it's right? Well, if you are a taxpayer, again, I highly recommend that you do this with a tax professional. At the minimum, even if you don't retain them for full representation, have a consultation with somebody who is credible to be able to walk you through the process to make sure you didn't skip anything, right? And if you are a tax professional thinking that exact same thing, I highly recommend, until you get comfortable, you work underneath somebody that has been through this process, who works on these cases. Even if you don't work with them directly, you can have them as a mentor, a sounding board. And I'm going to put a shameless plug here. Right now, we have the Tax Pros Representation Journey, which is a private podcast and article subscription that also has a community where you can ask these types of questions. If you are interested as a tax professional in joining something like that to help you with representation work, to help you to become a better enrolled agent, then I highly, highly recommend that you subscribe. You can find a link to that in the show notes. But you can't expect, if you're not a tax pro, to be the expert in this because you're not looking at this all the time. So there is absolutely no shame in having to reach out to a tax professional for a consultation to make sure that this is right. You are welcome to book a consultation with me at bowenstaxsolutions.com. But as I always say, it doesn't have to be me, but make sure that you get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.